So we're in chapter 12 and we're in section 7 and we're going to be talking about payroll record. If you're a small business owner, you need to keep track of your payroll because you must comply with federal income tax laws that require you to withhold certain things. The things you need to withhold are the federal income tax, the Social Security tax, the taxes for state and local taxes. And the employer needs to withhold these things so that they are going to be paid, in that way. So as an employer, you need to cover, because you have your share of the Social Security tax you have to pay on each of your employees, and you also must pay the state and local unemployment taxes for them, and workers' compensation for them, and disability insurance for them. When you hire an employer, they need to fill out a W-4 form, and this is necessary to compute your employees' taxes. So when you hire somebody, they fill out this form that goes to the government. And the payroll, which should be kept, listing all of your employees, all of the hours they worked, all of their pay, their gross pay, and all of the deductions, and then their net pay on each employee. And this has to be very accurate and organized so that at any time you can look at the total earnings that they've made throughout that year. And each time the payroll is made, the employer must total all the amounts withheld from all the employees for federal income tax and Social Security tax. So it's important that you have somebody, some record accountant keeping this all on each one of your employees. And the employer must send this amount plus the employee's share of the Social Security and to the IRS, the Internal Revenue Service. Internal Revenue Service needs to know all this so that basically the government can get all of the taxes from each one of the people that you have as an employee. And 1 month after the end of each quarter, so when the quarter is up, at that quarter, that employer has to, required by law, to file the employee's quarterly federal tax return quarterly, so that the government can find out how much money each person is making and what is owed in taxes. So here's an example of this form here that shows the payroll record and keeping this record. So let's look at this here. So you can see the payroll period. They have 4 periods of time. This is for Nate, and this is where he lives and his Social Security number, and all this is birth date, whether he's single or married, does he have exemptions, how much does he make, what did he make in overtime, so they know what he made in overtime and everything. So if you're working, your employer should be making this on you, making this record on you. And they filled out that W-4, that's a W-4 form, and filling out the payroll record here. And you can see there's 4 payroll records right here. He made how much straight and how much overtime, 40, 40, 40. He made some overtime here. And then the gross pay, and then how much is taken out, the FICA, which has to do with the Social Security, and the federal income tax, the state income tax, the tax deductions added up here onto what they ended up being paid. So the gross pay was $500, but after they subtracted all the taxes, he only got paid $356. Let's see, I'm not showing it very well here. There we go. So he only got paid. So after the gross pay here, he only got $356. So out of that gross pay after they took all of those deductions. So let's go over that real quick. The gross pay, this is the Social Security, federal income tax, state income tax, and the total deductions. Out of that, he got 143 taken out, so he only got paid 356, even though he made 500 in overtime or in straight time. This one tells what you made, and again what their net pay was. He made 556.25. He only got paid 397 after the deduction. So each employee has to put this together on each one of their employees. The employer has to make sure that all this is kept tracked of what they worked and how much they were paid and whether they were paying taxes. And like we said, there's a lot of other things, not only these things, but other things, workers' comp, disability, that kind of stuff needs to be paid on each of your employees. Okay, so let's go on to look at your problem here. And here's the model problems are pretty easy because they're just going over the net pay. You have the fitness club has full-time employee and 2 part-time employees. The last pay period, the full-time employee had a gross pay of $580 federal withholding of 93 and 7.65 Social Security, and each part-time employee had a gross pay of 225 federal withholding. You can see Social Security. How much in tax money did the employer have to pay to the Internal Revenue Service? And you can figure this out pretty easy. You find the amount of Social Security tax, and that rate was 7.65. So you can use your calculator. Their gross pay was $580, and so they paid 0.0765. You change that to decimals. 7.65% is 0.0765. That's the rate. Multiply that out, and the Social Security tax for the full-time employees paid $44.37. Find the amount of Social Security on each part-time. The part-time gross pay. Move it over so you can see it all. The part-time gross pay was 225 gross pay, and the Social Security, again, it's 7.65%, so 0.765. You multiply that out, and you get how much you're paying on Social Security taxes, which is $17.21. On 2 employees, you paid $17.29. That's $34 of Social Security tax. And so now you find the total of what you paid on your employees. You paid $437 up here on the full-time employee, and then you paid $34.42, and you add those up, and that's how much Social Security tax you paid for all the employees. And the employee's share of Social Security tax is $78.79 right here. So the employee's share, you're going to pay $78.79, and they're going to pay $78.79, so $157.58 Social Security tax. To find the total tax money paid, combine the federal taxes paid by the 3 employees and the total. So you get $93 federal tax for full-time employees, $32, and then your Social Security tax. The total taxes you're going to pay is $314.58. So anyway, so you can go over that. And that's a model problem, a harder problem actually. The other thing we want to go over is, now we're going into chapter 12.8, is the break-even point. It's when do you break even we need to know the point. How many items do you need to sell to break even? So you have, so now if you break even point that you're going to make profit. How many do you have to sell so that you can make a profit? The break-even point for a business is the point at which the amount of sales equals the costs, and you break even. You need to know that point, because then after that point, you'll be making money. So the break-even point, in manufacturing, there are 2 types of costs. They're the fixed costs and the variable costs. Fixed costs are those like leasing the building and remain the same. Those remain the same no matter how much. And there's variable costs, such as the cost of raw materials and labor, and the increase with the number of items produced. The relationship between costs and sales can be represented on a graph. So basically, you're going to look at this graph here. You see where you break even, the break-even point. I'm not going to go over this whole model here because you'll see here, this is the cost line, and this is the sales revenue line. And when they intersect, that's your break-even point, which would be like 285 products you had to sell. So basically, it says a manufacturing company can produce a product by spending $5,000 in fixed cost plus $12.50 per item in variable cost. So to find this, you basically are going to mark this 5,000, 5,000 right here. So we have the 5,000, 5,000, and then from that point, just like you're making in fixed cost, and the cost then being 5,000 plus 400 plus times 1250, which equals 10,000. Anyway, you can look this over yourself. I'm not going to go over this whole thing, but it kind of shows. You're going to find the cost line and the sales line, and as these things, you'll find out where they break even. But to do this easier than graphing it all out on each variable cost, you can do it on the next. I'll give you a formula, which would be a lot easier than the graph. So the break-even point is going to be the total fixed costs, those costs, divided by the selling price by the variable cost. That means how much does the cost vary when you sell it, that variable sell cost. So the break-even analysis can be applied in retail sales as, anyway. Use the break-even point formula to find the point of no profit and no loss. No profit is no loss means you haven't lost anything and you haven't gained anything, and that's your break-even point. So from model 1, we substitute the values of the formula. So the break-even point equals the total fixed costs, which we already knew from the last problem was 5,000. And so now the selling price was 30, but it varies. That selling price varies by $12.50. So 30 minus $12.50 is $17.50 over 5,000. You calculate that out, and you have to sell 286 items to break even. So that's a little more complicated, but if you use the formula, you can find out how many items you need to break even. Break-even point. Okay. So we're going to go on to the trade discounts and onto the trade credits, and then the last section is going to be on inventory. It's going to be on your inventory. So let's do that in the next. They kind of go together. So we'll do it in the next video here to go over.